Victor Adair joins me now live from the trading desk. You know, Vic, I've chatted to you over the years and said, you know, what we want to do is get stuff right on this show. You know, I'm proud of the record, whether we're talking about the demographic shift that we just had verified this week. We talk about technological substitution. Very proud that we called the down in the gold market when we did. Our major recommendation on this show, you, Michael Levy, myself, has been to get out of the Canadian dollar into the U.S. dollar. All of that has paid off, and we've got another example this week, and that is you've been saying to us, our audience, I guess it's for about 6 weeks now, that you are playing the oil market to go down. At that point, it was around $55, $56. Joseph Schachter at the World Outlook Conference sort of said, wait, there's going to be another down leg here. Well, we're certainly seeing that weakness this past week, you know, with oil getting down into that 45 to 46 range, mini bounce on Friday. What do you think of the oil market now?
Well, that's a $64 question, isn't it? And by the way, I do stay very closely in touch with Joseph. It was, I think it was 3 years ago at the World Outlook Conference. Joseph and I really had a good sit down after he'd done his presentation. I was very, very impressed with what he had to say, and he kind of laid out his bearish case at that point in time. And we started trading crude oil from the short side back in 2014 and got a good part of that leg down. Right now, okay, and here's one of my favorite little chestnuts, okay, and that is you have to keep the time frame of your trading in sync with the time frame of your analysis. So, you know, if you're a day trader, you're a day trader. If you're trying to position for a multi-year move, you know, bear that in mind, and you got to put up with a little ups and downs. But you go back here at the very first of this year, we had oil at whatever price it was. We are now down about 24%. That's in WTI crude. We've had this tremendous break here just the past, since early mid-April. I guess we're off 10% at one point this week. And then on Thursday night, Mike, this is how interesting my life is. After dinner, I'm up here looking at the markets on my screens, and I saw crude oil, just like in the course of 15, 20 minutes, fall $2. And it was 8:30 at night, and I thought, what's that all about? You know, North America's closed, Europe hasn't opened yet, Japan is closed for a holiday. Why is this happening? It didn't look like a fat finger, like somebody just made a mistake. It just looked like this relentless selling, and that leads to this. There are rumors in the crude oil market, and you know it's going to be true, it's going to come out, that there has been forced liquidation by people who've had these big, bullish, long positions on crude, where the margin clerks say, you want to keep that, you got to put up more money. They haven't got more money. The margin clerks sell them out. I think that's what we saw Thursday night. I think that is like almost a capitulation in the market, and we could see a little bounce here in crude, you know, over the next week or two. I remain bearish, as Joseph Schachter does. I think we're going to see lower prices, but, you know, the market psychology all across these markets. You can get the U.S. stock market with the S&P, for instance, and the NASDAQ at all-time highs. The dollar right now, the U.S. dollar, 6-month lows. There is a lot of things boiling out there, and people are kind of swinging from pillar to post in a number of markets. Crude, very dramatic fall, could have a little bounce here, but I think it's headed lower as we go in the next couple of months.
Let me just give a plug for Joseph, by the way, Victor. I'm glad you brought him up. But SchachterEnergyReport.ca. Schachter is spelled SCHACHTER, EnergyReport.ca. It's a brand new service that Joseph has, and I want to reiterate, he's going to come back on our show. We're trying to get him on, but you know, he said he called this down move, but he also said when we get there, I'll tell you exactly what to do to take advantage on the way up. And so he doesn't think this is a long-term in terms of, you know, 2, 3, 4 year bear market. He thought it was going to be a significant correction. Victor, just give me a hint when you do that. Like, as I say, you've come on every week, and I don't know, 6, 7 weeks. You said, look, I'm going to play that oil market to go down. Tell me how you know, precisely you do that. You take a contract, and the contract basically says over this period of time the market's going to drop.
We'll trade futures and options on the commodities market. And one of the things that we do differently than a lot of speculators that are in that market is we hardly use any leverage. Okay, I remember Jimmy Rogers being on the show years ago saying one of the greatest ways to participate in the commodity market, and back then, we're talking about the beginning bull market in commodities, he said, use the futures and options markets. Just don't use so much leverage. That's what kills people all the time. Mm-hmm. So what we've done with our crude oil positioning, and we've been doing this certainly all of this year since the beginning of the year, is we've been buying puts. Why I like that is if something blows up, there's what they call a geopolitical risk in the Middle East, and all of a sudden the crude oil price jumps $15 or something like that, we're not going to get killed. When we buy a put, the amount of money we pay for the put, that's the maximum we can lose. If prices go down, we get a good return. And it's the whole thing about managing risk. In our latest monthly letter that's up on our website, I gave these two great chestnuts from the boys on the floor back in the old days. One of them was, got a hunch, bet a bunch. And another one was, you can never have enough on when you're right. Yeah, and I took these cliches as being a real sardonic way of pointing out to people, you're going to make money from managing risk way more than having some magical crystal ball. So we like to, keep the volatility down. The way we've traded crude oil is buying puts, gives us the opportunity to make lots of money, but it also limits our risk in case we're dead wrong.
Okay, I got a couple more questions for you. You got to give me the 1-minute answer. You've been short the Canadian dollar. You've been playing the Canadian dollar. We've been doing that long term in this show and adding to it on a short-term basis. Are you still short? Are you still looking for numbers, sort of low 70s, even lower?
Yeah, as our listeners know, I've been bearish on the Canadian dollar for 6-7 years. I've been trading it that way in my savings account where I just switched money into U.S. I got to tell you, there's a very interesting thing just happened here with Canada. I mean, the whole world the last couple of weeks has got bearish Canada, and that shows up in market psychology. I think there's a good chance, and here I'm bearish Canada. I think there's a good chance Canada could have a little bounce. We had quite a bounce on Friday. It's just there's such a large bearish position, reasons to be bearish, but markets have these swings in psychology. When the market gets too bearish, it just doesn't go down anymore, and it'll pop, and the people that are short have to cover. I think we're going to see the Canadian, there's a good chance, I should say. I think there's a good chance we'll see Canada trade below 70 cents this year. But in the very short term here, I think we could have a little bounce. And maybe if you're bearish like me, you look for an opportunity to sell Canada if it has that bounce.
And as you say, regular listeners know I hate the euro.
Yeah.
Doesn't mean every day I do. We've been playing it to go down from 160, then 134, 123, all the way down. Okay, here's the deal, Vic. They're going to have the French election tomorrow. Macron is going to win. That's going to spell good things, because Le Pen wants to get out of the euro, but good things for the EU on the short term. But will that signal sort of a top in this recent move that's seen the euro kind of build momentum? That seems to be the reason. Do you think that'll, is that the time to short it actually at that point?
We bought some puts on the euro near the end of the week here, and this is just, as Dennis Gartman would call it, a punt. We just got a little view here. We think the thing has had a heck of a rally over the last couple of months. But here's my thought, really, is that people have been so bearish the euro for so long, and I think, we got the thought was it was going to break par with the dollar and go lower and lower and lower, and it just didn't go. So I think we had, the last few months, we've had people covering in their short positions. It may be that, and I got to say this in quotation marks, but it may be the improving economic and political circumstances in Europe have been hidden because everybody thinks it's just a disaster over there. We've seen the German stock market move to new all-time highs, and I know we've had people talk about stock market is cheaper in Europe than it is in North America, so we've had money flow over there. Maybe, we're just taking a view here. We've had a rally the past few months. We bought some puts on the euro. If we're just dead wrong, we're going to lose a little bit of money, but if we're right and the euro actually does roll over, we'll make some money there.
Victor Adair, thank you as always. And by a reminder here, you can go to polarfuturesgroup.com, polarfuturesgroup.com. You can get Victor's weekly comment there. And, of course, we appreciate him being with us here on Money Talks. Have a great weekend, Vic.
Thanks, Mike. You too.